Today I'm going to be talking about InvestEngine, which is a low-cost ETF investment platform. Hi, welcome to Dan Talks Money. Today I'm going to be covering InvestEngine and the reasons why I've picked this platform to open up my investment ISA. Now, whenever you open up an investment ISA, you have got your capital at risk. I have done a bit of research over the last 2 weeks to try and find a platform that's suitable for myself based on ETF diversity. So that's a wide range of ETFs, and also taking into account platform fees. Now, I've heard a lot of good things about InvestEngine, and one thing that enticed me to pick this platform to invest is their low cost fees. So they've got two different types of portfolios on their platform that you could use. One is a do-it-yourself portfolio where you pick your own investment and ETFs based on whatever you read off the list for that ETF. And then the second one, there's an option to be managed, and you can put in some criteria, and then this robo will pick the best ETF option for you. And that will take away, I suppose, a little bit of doubt for yourself and maybe give you a little bit more confidence if you're a first timer investing in an ETF. What I'm going to do now is I'm going to sign up to InvestEngine and open up my own personal account. And then what we'll do is we'll have a live look at the two different options, so I can see which one I want to enter into, whether it's going to be making myself and wing it, or whether I'm going to let the robo do all the hard work for me and pay the fee. So I'm just going to go on to the InvestEngine site now. If you did want to join InvestEngine, then I will leave a referral link in my description just below. It'll take you directly to the InvestEngine webpage where you can continue to sign up. And when you credit your account with £100, they will reward you with a £25 bonus. Okay, so let's just click on Get Started. Now we're going to go for an individual investor. Okay, so finish registration to start investing. Okay, so we're all signed up. You do need to have your national insurance number to hand, also your bank details, so account number, sort code, and a bank statement from the last 3 months ready to upload. So we'll head across now and we'll have a little look at the different portfolios. Okay, so we're on the dashboard. We're going to click on Add New Portfolio. Okay, so choose your investment service. So we've got to do it yourself. So pick and manage your own investment for free, or managed for you. So InvestEngine builds and manages an investment portfolio for you. Let's take a look at this managed for you. Okay, now we've got two different options. I've got ISA, which is invest tax-free with our stocks and shares ISA, or personal, invest with our flexible personal account. Now I'm going to go with ISA because if I earn loads from this ISA, I don't want to be paying any tax on it. So I'm going to click ISA. Okay, so open a new ISA or transfer. So this is my first ISA, so I'm just going to click open a new. and then select a portfolio type. Okay, so look at this. Invest in a managed portfolio for longer term gains. That's the growth. And then income, invest for regular income up to 1.3, 2.3 or 3.3 a year, estimated and variable. Oh, I don't want an income from it at the moment. I just want to go for growth. So I'm going to select create the growth portfolio. Okay, get started. We'll use this to build your portfolio, but you can always change the amount before you commit. So I would like to invest, let's say 500. Continue. I'm going to go with medium term. What is important to you when investing? Minimize losses, maximize profit, both equally. Ooh, both. What would you like to do if the market takes a downturn? Well, I'll buy more. How big a loss in this investment can you sustain before it negatively affects your future standard of living? Well, it's only £500, so a large loss would have no impact. I prefer a guaranteed rate of return to uncertain returns. Oh yeah, I agree. Will you need to withdraw any funds from this investment within the next 5 years? No, I won't. Which financial instruments have you invested in before? So we've done shares. No crypto on there. So we're just going to go with shares. Okay, so it looks like they've picked something. So this is your selected portfolio. The projection tool below allows you to assess the impact of altering the composition and risk level of your portfolio, time horizon, initial and monthly investment, and set a set target figure if required. Okay. So with my £500, they're going to put 73.9 in equity, 20.3 in bonds, and 6.1 in alternatives for a time period of 10 years. So this graph shows me at the very start in 2022, it's got £400 on the bottom. Right, I see. So slightly above the 400, which is the 500 amount that I've selected. And then as you can see over the years, providing that the portfolio performs well, my money should grow. By continuing, you acknowledge that your capital is at risk and you should not invest an amount that may negatively impact your lifestyle. InvestEngine makes no recommendation as to the portfolio you select, only that this portfolio is suitable for you. Yeah, all sites will show a disclaimer, and it is very important that you do take note of it and only invest in what you are willing to risk. You know, remember, it doesn't always go up, it could go down. Okay, so I've got the Growth 7 portfolio, which is a managed account on InvestEngine. So we're just going to take a little look what it's projecting for me based on the information that I fed into it. So as you can see on this portfolio, the projections are set for 10 years with an initial investment of £500. You've got 73.9% in equities, 20.3% in bonds and 6.1% in alternatives. So what we're going to do now is we're going to have a little play around, a little look at exactly what these percentages are, and we're going to add in monthly investments as well. So I don't want to just stick like £500 in there and forget about it. I want to build on it, get some compound going. So for monthly investment, I can throw in 200 for the next 10 years. Apply changes. Let's have a look what this does. So it's projecting from when I invest the money with the initial £500 and then monthly 200, that in 10 years time the projection is heading over 56,000. So let's take a little look at the allocation on where equities, bonds and alternative sits. Ooh. Okay, this looks like a complex portfolio. You can tell it's one that I haven't picked. So equity, 73.9%. There's quite a few in there. We've got iShares from the FTSE 100, 3.4%. X trackers, S&P 500, 20.7%. That's quite interesting. That must be forecast to be the biggest return. Bonds, 20.3%. So we've got Vanguard Global, iShares, US, UBS Emerging Markets, and in the alternatives, iShares Physical Gold. Okay, so we're on my dashboard. You can see that I've got the Growth 7, which is the robo-generated one. But if you are feeling confident or you're looking for something specific, then you can go to the do-it-yourself one. So I'm going to add a new portfolio, do-it-yourself option, ISA again, continue, okay. So there's a lot of choice here now. You've got over 280 plus ETFs to choose from. Now, if you have got something specific in mind that you've done a bit of research on and you just need a platform to make the investment, then go ahead, have a little look from the list. It is extensive. You can tap a name in the search bar. Or you can just keep scrolling. So I'm just going to have a little scroll through to see if there is an ETF that's globally diverse rather than country based. So like a UK ETF. I want to go for a global one because I feel that global will give me a bit of variation in there. If the UK are down, the USA are up, Canada are up, then I got my finger in everyone's pie. So yeah, we've got a few from Vanguard, a few from iShares. For example purposes, I'll just click on this iShares S&P 500 and we'll take a little look. Okay, so this is the performance chart from all time. You can see there on the right the latest price to purchase it at is 33.63. But as you can see, as I go through to a year's history, this particular ETF is up 21%, which doesn't mean it's going to get another 21% this year. It could get less. You know, you could end up losing, but yeah, you know, it could continue to grow. But do it yourself, as you can see, plain, basic, simple, specific. If it's what you want to do, you know where to go. So once again, thank you for watching Dan Talks Money. Don't forget, you can go to the section below in the description. You can click on my link where it'll take you directly to the website, and you'll get a little bonus of £25 once you've invested £100.